And talking about the markets, David Stryzewski is here, CEO Sound Planning Group. Your thoughts, because what sell-off, right? I mean, in fact, that sell-off that we saw in the Dow after the CPI report, and we were down over 500 points, was the worst sell-off we'd seen in almost a year, I guess about a year. But look, we made it all back. In fact, the Dow's positive for the week now.
You know, the market is kind of an interesting thing, and it's always great to be with you here, Nicole, to discuss these ideas with you. You know, I think we're all just kind of, you know, in motion right now, waiting for maybe a next shoe to drop, or, you know, when we get reports like this that are not necessarily as positive, like, you know, the CPI going up here on Tuesday. And then today, you know, we had consumer spending coming in way below what analysts' expectations were. You know, the market is kind of priced to perfection, if I could say it that way. And obviously with these amazing runs on the front end here, my thesis has been that we will see a melt up prior to seeing a meltdown. And so I don't think that we are completely done with the run that's in front of us, but I think it is cooling, and it's becoming more prominent in fewer and fewer names.
Right, understood. So how are you feeling about trying to put some money to work? I mean, what are your thoughts there?
Okay, so, you know, there's a couple of things to look at. I mean, most of the talk here today has been in the Magnificent Seven, which many are talking about. Maybe that becomes 3 right now, because, you know, we're seeing a little bit of waning going on with a few of those players. You know, the market seems to be climbing this wall of worry, and if they can, you know, settle some of these fears, I think that we're going to see a broadening out, specifically in small cap stocks. And so, you know, if you're looking at like the Russell 2000, a lot of analysts would communicate that we're looking at about a 50% growth in that specific index this year. I think that absolutely could be possible, especially as, you know, more capital might be going to places that, you know, might have a little bit better upside in front of it. So these small cap stocks might have a little bit more room in them in comparison to those Magnificent Seven.
Interesting. So small caps may be a way to go. And Bitcoin, you were talking about the ETF there, right?
Yeah. So, you know, here's an interesting thing. I think that Bitcoin right now is priced for a serious rally. Of course, when we begin to get new institutional money, like the big money starts, you know, pouring into this, and it's not just, you know, people like myself that have just been dollar cost averaging in for years now. What happens is, you know, we really get a lot more price momentum on the upside. And coming in April is this unique time frame in Bitcoin's world. And not a lot of people understand this. This is this moment called a halving time frame. And what halving is about is ultimately, you know, they cut the rate in half that they give to those, you know, supercomputers that solve the really, really challenging and complicated mathematical equation that mine these Bitcoins. And so it's going to become twice as expensive, to say it another way, to actually mine these coins. And why this is also important is that we're now getting, with these new ETFs, more exposure from retail investors who maybe wouldn't have opened up a Coinbase account necessarily, but through Schwab, you know, they can get into the, you know, the Bitwise ETF or whatever is their favorite version of that, and ultimately allocate in there. So a couple things that I would just note about Bitcoin for just a second. It is not going to be able to solve all the world's problems. So let's just put that in out there for understanding. But it is a real asset class that I believe is going to have in command a lot of value here, especially as we go forward into the future. And, you know, we're seeing currencies and different things kind of begin to change. We're seeing a lot of leadership in the world begin to change. And a lot of people are looking towards a Bitcoin as a decentralized way of offering solutions, you know, or being able to, you know, to invest. And so, you know, real key, though, if you lose your keys, you lose your crypto. And so this is one of the things that the ETF actually solves, is the fact that you're not custodying it. You don't have to worry about losing them. Just own the ETF. You can sell it when you want to sell it, or hold it as long as you want it.
Right. And you said, look, I mean, it's also a FOMO trade. A lot of people start to say, oh, everybody else is getting into Bitcoin. I'd like to do that too. For the small caps, the ETF that you were focusing on was IWM. But also, I wanted to ask about the elections. And you said that the elections matter, right? And they matter a lot. But you said if you're risk diversified and tax diversified, what would be some advice there?
Okay, it doesn't matter who you are, what side of the aisle that you find yourself having a political disposition for. Everyone knows this is a critical year in the election cycle, and so whether it's going to be taxes, whether we end up in World War III. I mean, there's like so many things that are in front of us here as a nation, and so obviously, I don't think it's a lot of people's like most exciting thing. Like, hey, it's another election year. Here's what I'm going to say, though, is just to the point that you noted. If we are risk diversified in a way that is going to have a truly diversified portfolio, and I'm going to actually include diversified outside of the bond market, which I think is going to have some challenges, you're going to be a lot more set up. And it doesn't matter nearly as much what the outcome is. But then tax diversification. Now, this is something that is not commonly understood. There are after-tax accounts, tax-deferred accounts, tax-free accounts. What we do as retirement income planners is we help to blend withdrawal strategies in order to create a more optimal income for somebody's lifetime. And this, for many families, is going to be saving hundreds of thousands of dollars. We save millions of dollars for families literally every month. But ultimately, if we can have these things in place on the front end, it's not going to matter as much, although it absolutely matters what happens in this election. So with that being said, these are the things that we can do and we can look to, specifically Roth conversions, Roth contributions, as the Tax Cuts and Jobs Act have created such a wonderful environment for us to reduce or eliminate taxes.
Yeah, so you're a little bit nervous about when you talk about bonds and maybe the treasuries. You sounded a horn there, right? A little bit of caution there. How about cash? Because we did have a guest who said, look, put your money in cash, you have money market accounts, and you're doing well there. How do you feel about that?
Well, I think that cash is actually a real position. In fact, as we look at risk diversification, we have 3 categories of money. We just declared as CPR: cash assets, protected assets, risk return assets. So cash assets are really important. Now, we need to establish a certain amount there, and we don't want to go too heavy. I will say this, if we know where we're at in a cycle, and I personally believe we're still at the top and we're not at the beginning of a new bull market. The thing that none of us know is, when the market's going to drop, how far it's going to drop, how long it's going to be down, what the Fed's going to be doing along the way. So if you have more cash that you can hold on the sideline, or you have protected assets that give you some liquidity, when the market drops, which it will eventually, what ends up happening is we can buy things when they go on sale. So, Nicole, I love the idea of having cash and liquidity available to us, because that's where we want to go shopping, is when everything's on sale. I love a good sale. I don't know about you. I think most people do, but that's our thought.
David, thank you so much. David Stryzewski, CEO of Sound Planning Group. Glad you were here.
Pleasure to be with you.